Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Well, yeah, and it's a real world in which we live. And when it comes to money, reality is there are good times and there are bad times. There are high
I'm assuming
interest
you're thinking
rates. There are low
that's
interest
true.
rates.
All right, fair enough.
There are rising markets. Oh, wait. There have been rising markets.
Past
there
tense.
have been falling markets. And you are never going to have the one you want when you want it all the time.
Wow, that is deep.
Thank you. I was going for
That's
profundity.
literally too deep for me. I'm going to go tell my dog. See, he's a lot deeper than I am, so he may may get it,
your
but
dog-
I doubt it.
Doug has no depth whatsoever.
He brought a steak back to the house. Not the
A steak?
meat kind either. Like a.
What, did he kill the bear?
I don't know. He comes running in the house with. I'm like, what? Did you just tear up the property line or something?
I'm so
dude?
proud of myself.
Literally, I've never seen it. Yeah, and he's like, I get to keep this, right? No, you do not get to keep the steak. Sorry.
Good dog.
Crazy.
I love dogs. Hey, welcome to Talking Real Money. I'm Don. That's Tom. Our phone number is 855-935-8255. That is the number you use to get in touch with us here on the program and the podcast. And the wonderful news, this is the best news ever. Right now, if you call right now, you will be the first one up this hour, this podcast. Just give us a call, 855-935-TALK.
There's still some outrageous amount of money that's in what I would term cash, right?
This
It's
is
like
one of
$18 trillion.
your sore points. It's like
It really
there's
is,
just
because
too
you're just so
much money
wasteful.
in cash.
It's wasteful. Unless really it's something you need the money for in, I'd say, the next 3 to 4 years, it should be invested in some way. Not saying what way,
I
but
can
some
tell
way.
you that mine is, and it hasn't been looking
mine
too
is
good
too.
lately.
No, that's
It's a sad,
okay.
sad
Oh, yeah,
thing.
okay. That you're going to call me up and say it would have been better to be in cash, Tom, because the markets.
Tom, if you hadn't told me to,
Yeah.
no, I know the realities. I've been through this a couple of times. You know, the more experience you have with the markets, the more stoic you are.
Or maybe it's just old and you can't figure it out. But okay, so
Don't tell anybody.
the 10-year Treasury now is somewhere around 3, getting close to 3.
Yeah,
Which not that long ago.
It went down
like
yesterday
1.
to 2.97 or something.
It's gone up considerably. And so
Yeah.
those people that take care of your money in these money market mutual funds,
Yeah.
I'm giggling because the amount they charge is
Well, I'm looking at one
truly
right now.
outrageous.
Vanguard's federal money market fund, which is all federal securities, has a 7-day yield. Okay, you said the 10-year Treasury was 3 almost.
3 basically. Yeah, right.
The 7-day SEC yield is 0.23.
Yeah, okay. Well, and Vanguard probably doesn't charge much.
Well,
of that.
no, actually, this is what surprised me. Up until 21, they were charging 11 basis
much?
points. Now, they stopped
In that environment,
charging.
yeah.
They
Okay,
stopped charging
yeah.
that recently. They're eating the fee because if they took out the 11 basis points, your yield
You'd
would
be
be
giving them money.
0.12 or 0.12.
0.12. Yeah, but I was surprised to read today that fund companies charge roughly 0.25 to 0.5 annually to manage money market funds. Really?
It sure
Really?
does seem like a lot for something that is not a complicated product to buy or sell. Although because it's a money market fund and these things are very short duration, very, very like days long, weeks long, they're moving money an awful lot. So there are costs to that constant motion and the systems involved to make that happen at a multi-billion-dollar or trillion-dollar level.
Yeah, okay, so but this gets back to kind of why you're in cash, where your cash is. You've heard us talk about this before by going to bankrate.com. I think you could right now get a high-yield savings account for 0.7 or 0.75.
You know, I haven't
right?
looked in a while. I haven't looked on my book.
It's, the yield on the retail money markets, it did go up almost a quarter point this week, or in the first quarter.
Oh, my gosh. We're up to 0.8% on a savings account.
There you go.
At Basque Bank. Is that in the northern regions of Spain? Is that Basque? Oh, no, it's spelled with a K, not a Q.
It's not here, although the sun is finally out today. This is something for you to take very seriously if you have a lot of money in cash. Truly, it is.
Yeah, it is. And we're going to talk more about how you can deal with these short-term monies coming up. 855-935-TALK is our number.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
If you're confused about investing money, saving money, creating an income in retirement, avoiding being ripped off by a lot of people who just make it their life's work to do so. They may not even be thinking about it. I don't know that any of them consciously think I am doing wrong by my clients.
No, most of them think they're not. They think they're doing fine.
Yeah,
sure.
But when the reality is they're not. And it's, I hate to say it, but it's going to be up to you to call them on it. Because nobody else is going to do it. If you think the federal government is going to do it or state regulators or somebody, that's not going to happen. It's your job to do this. And I know it's difficult when they are such nice people, like those folks at your local Wells Fargo branch who have been in trouble since the beginning. I mean, Wells Fargo keeps getting themselves in more and more trouble. But this isn't a big one.
But truly, what we're going to talk about is an outrage. But then the second part of the outrage is their ESG rating. But
we're not going to get into ESG.
Money market, because it's too far down. And by the way, if you want to learn more about that, listen to yesterday's podcast. That's you want. Anyway.
I kept scrolling when we were in Bankrate.com. I scrolled down the page past the savings account rates at 0.8%, 0.7, 60 basis points. I kept scrolling, and it says additional offers lower down the page. Ooh. Well, additional offers. That must be something good. Either that or it's an advertisement. Well, in this case, it must be an advertisement because here it is. Additional offers. Money market account from Wells Fargo.
Ooh.
The APY. Well, first, let me tell you, the minimum balance, merely $25.
So $25. Almost anybody could afford it.
Almost anybody can get into this account, earning a whopping 0.01%. That's 1/100th of 1%.
Which you said Vanguard was paying 0.23, right?
Correct, on a money market, which is still
it's
pathetic,
the same
by the way.
Securities. It's the same securities, though,
yes,
basically.
It is.
I mean, it has to be.
But wait, there's more. That minimum balance, you're thinking, okay, this will work for my kids. They got $1,000, you know, they need to keep it liquid to pay the bills. This would be great for your kids. Well, until you click on the button that says offer details. And you read a little further down, and it says, minimum balance to avoid fees. To avoid fees? Oh, there are fees on a money market account? I thought that you were making money on the spread between your 0.01%
that you're giving us and the
25% credit cards that you're handing people.
Right.
Yeah, right. You're getting 25% of the credit cards, Bank of America or Wells Fargo, right? You're getting that. So your spread is like 24.99%. Now I realize you got some losses in those credit cards, but still, you're making pretty good money. So, what if you only have, let's say $3,000 in your Wells Fargo money market account? How much money do you make in a year on that $3,000?
I think that's $3, right?
That is correct, sir. Three whopping dollars per year.
Wow.
Per year. So at the end of the year, you still cannot afford a small, also known as tall, latte at Starbucks. You cannot afford it after a year of interest. Oh, but
where are you at Chick-fil-A for $3, by the way?
I can get my large iced tea.
No, that's okay. All right, keep going. So $3.
This is a great story. You're going to have so much fun with this.
Yeah.
But if you only have $3,000, your account is subject to a fee.
In addition to whatever the spread is, whatever they're making.
Right. This is a fee they're going to charge you. They're going to deduct from your $3,000 account. Not every year. No, they're going to deduct this every month from your account. For giving you the pleasure of banking with Wells Fargo, ladies and gentlemen,
how much?
Your $3,000 will decline by $12 every month.
Wait a minute. So I think the math is you're paying them $144 a year for the pleasure of holding that money, basically?
Your net loss is only $141 a year after the interest.
Good Lord. Wow.
Is that sad?
It's worse. It feels like
it feels bad.
Say a lot of bad things. Yeah,
it does. Doesn't it feel
awful.
like it? It honestly feels like they don't give a damn about their customers. That's really what it feels like. I don't know if that's true, although given some of the stories we've heard about Wells Fargo and the fact that they created accounts that you didn't want and stuff like that, maybe they don't. And this is the industry, my friends. This is the industry. It is making money at any cost. It is doing whatever it takes to make the people who run the business rich at your expense. And I am not an anti-capitalist. I am a capitalist. I have started businesses. I have made money in businesses. But my goal has always been to try to treat the people who do business with me the right way. Am I wrong?
No, I think you've done that
up?
correctly. All right, that's to me that's an outrageous story. But let's assume that you do have $3,000. And that you don't,
don't go to Wells Fargo.
Okay, we've fairly well established that.
All right.
But your best options for like short-term savings, I still think are probably going to be better in one of those high-yield online savings accounts.
And with that little glitch that we didn't even realize happened yet, the show started to go downhill. You see, we feed our Saturday show live from both Tom's home studio and my home studio, and we feed it over a sophisticated technology over the internet to Northwest News Radio in Seattle. Well, we didn't realize, but something was going intermittent along that internet path, and about every 30 seconds or so, our conversation was being cut off from listeners completely. It wasn't even recording. It was completely cut off.
But I mean, aren't these better options than the money market funds?
Yes, they're much better.
I mean, it just...
A 1-year CD, you're looking at 1.25%. A 2-year CD, you're looking at 1.6%.
And by the way, this is not insider research we're doing. We're simply going to bankrate.com, and you can all do this in about 2 seconds. And you could set up one of those online accounts.
See, just like that. Got cut off again. Of course, for some reason, it was in the middle of Tom speaking. I don't know if that says anything. I don't know if there's a hidden meaning there. But it kept going. We still hadn't noticed yet. That's a deal.
Okay.
I'll take that.
Yeah, sure.
Which increased my return to like 2.5% or something.
But here's the bottom line for all this.
Yeah.
Because people say, it doesn't matter. It's $3. It's $8. It kind of does, because you need to be an efficient custodian of your money, because all these things at the end of the day do affect your overall financial health. I'll put it that way.
And
so don't ignore.
When we realized we had a problem because we couldn't hear the music coming back from the station that we usually hear. Now you're hearing it because the station recorded it, but they weren't getting any audio from us at this point.
Tom and Don are talking real money.
Want a free copy of my book, Financial Physics? Well, go download it right now at vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Then when we came back from that break, we realized that we had a problem. We just didn't know whether it was on our end or on the station's end. However, we soon realized that Tom and I were able to talk to each other over the internet, so the problem wasn't at his end or my end. That meant it was probably at the station's end. But we still tried to solve it, disconnecting, reconnecting, doing all the things you do. You know the process of technology troubleshooting. It's sort of a pain. Well, that's what we were doing. And finally then we realized after the bottom of the hour where they do a news break on KNWN that there really was no point in continuing this, as our conversations were basically 30-second snippets that made no sense, like this one.
In the garage and listen to the show.
Monitor the show for us.
Listen to the show. Come on.
Here you go.
Yeah.
I got questions. Questions. Let's start with this one. No, I'm going to wait on that one. I'm going to do this longer one because I'm coming back to that other one.
Oh, now they say they can't hear us, so I don't know.
It says we're connected. So there you have it. A little behind-the-scenes look at what happens to a live broadcast when technology goes wrong. And with that, we pretty much ended our attempt to do a podcast. So you get an abbreviated version for your Tuesday podcast here at Talking Real Money. Thanks for listening. We hope you enjoyed it as much as we did, which we didn't a lot. So actually, we hope you enjoy it a lot more than we did on Saturday. Thanks for listening. Oh, by the way, don't forget to sign up for Retire Meet coming up in May. It's a terrific event. You can attend in person in the Seattle area, or you can attend virtually anywhere in the world. Just sign up at retiremeet.com. And to make it easy for you, you can spell it either way, retiremeet.com. Tell your friends about the podcast. Share it on social media. Maybe not this one, but thanks so much for being there. Thanks for listening. We really appreciate you. For Tom, who's not here right now, I'm Don McDonald, hanging out, talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?